Okay, so I'll go ahead and get started. And I do want to get a quick, for those online so one of those is Paul, and I'm going to introduce myself quickly, and then I'm going to have you guys each just real quick say your name and who you are and what brought you here today. I mean, I know why you're here, but what inspired you to pay attention to this? So I'm Jason, and I am Okay, so I'm Jason, and I currently am a commercial banker for People's Bank here on Whidbey Island, but I have a long history in real estate here on Whidbey. Pam, would you mind muting yourself? In fact, all of our participants online, until you're ready to be introduced, if you wouldn't mind just muting yourself for the background noise. So my background began in 2004 here on Whidbey in real estate brokerage. I started in 2004, and then through 2008, when the real estate market crashed, I was a regular real estate broker buying and selling homes, and had a propensity for commercial and investment real estate from the get-go. And then in 2008, I had an opportunity to join Windermere, who at the time did not have a property management company. And so I formed a property management company for Windermere from the ground up in 2008. When all my friends were leaving the business, I was being paid a salary to build a business for somebody else. It was a great transition. And so I did that with Windermere on South Whidbey for 6 years. And then in 2014, I moved to the Coupeville firm and expanded that same model to sort of modernize an existing property management portfolio. And in the course of doing that, was able to more than double the revenue, and then we folded it into the existing property management, and I walked away completely from property management in 2016. And 2018, I had a revelation about my quality of life. One Saturday morning, I was sitting there with my son, and he slapped my phone out of my hand and said, "Daddy, you're always working." And by Monday morning, I had decided that I was going to leave the real estate business and do something different that gave me better hours, more boundaries around my time. I just didn't have the self-control to say no to the clients at the expense of my family often. So I ended up making a switch and was hired at the Island County Assessor's Office and was the chief deputy assessor for a little under 3 years under Mary Engel, and did some good work, fixed some things that were broken in the assessor's office. But in the midst of that, became an accredited real estate appraiser under Washington Department of Revenue statutes as well. And then when things turned political, I was able to, we're just on introduction, so you're fine. Was able to jump on an opportunity with People's Bank to take over, and my background fit what they were looking for in terms of a commercial banker. A lot of what we do is real estate. If not real estate based, real estate is typically involved in one way or another, and having somebody with that background is a good fit. So I'm coming to you today because I have a background with Sammy and Goosefoot and some other things. And she reached out to me and said, "Do you know anybody that would teach a class on commercial leases, identifying a need?" And I said, "Well, I don't know anybody other than myself, but I'm happy to do it. So here I am, you get me." And I hope you find it informative. The format today is going to be, we're going to go through the slides real quick, and they're very general, very basic, just to kind of get the juices flowing. And then we're going to actually go through the leases. So Sammy has digital copies. If anybody online does not have one, please indicate when you introduce yourself and we'll get that to you. So I'm going to start right up here with Tel and let you introduce yourself. And I'll just...
Talman Sheikman owns Salon Bella. I've been leasing from Goosefoot for over 9 years. And basically, you know, and I know a lot about the hair world. I used to travel designing hairstyles and teaching. And I'm just here to learn more about the business aspect.
Great, great.
Hello, my name is Larry Shorey. I'm a facilities property manager for Goose, in a new position. And I am very interested in hearing the descriptions from a professional about leases, commercial leases particularly.
Okay, good.
My name's Tom Ryder. I'm working with Larry as his facilities assistant. I'm here to familiarize myself with the Goosefoot organization and what goes on here. And because I've always been interested in buildings and architecture and so on, I was an architectural photographer, and it one point, I actually took the test to become a real estate appraiser in California. And then ultimately went into the hospitality business. So I'm here to familiarize myself and to learn.
Okay, good.
Hi, I'm Sammy Postma. I'm the Events and Education Coordinator at Goosefoot. So I teach all of these workshops and I interact with our tenants a lot.
Great.
I'm Tessa Carno, currently of Unplugged Coffee, and we're looking to sign up. Was in that industry over 20 years ago, so I wanted to get a refresher, and that's why I'm here.
Great. Okay. And then we'll go online in order that they're up here. How about Paul? Quick intro.
Hi, I'm Paul Cheddar. I'm a associate and friend of Jason Joyner, and I want to be like him one day. So I thought I should listen to this talk.
Thank you, Paul. How about Beth? Okay. Interested in commercial leases. Great. Glad to have you, Beth. Join in anytime with questions. And then how about Pam? Pam, I think your microphone's messed up. It sounds like you're related to Chip and Dale. We're not hearing you very well. Okay. Maybe Pam will get that worked out and she'll have an opportunity to introduce herself when she asks a question. Okay, so we're going to get started here. Can you make it? There we go. There we go. Okay, so first, we're talking about commercial leases. And so there's a distinction between commercial and residential. The primary is going to be commercial leases are not subject to landlord-tenant law. That's really important to keep in mind, because when you approach a commercial lease with the mindset of a residential tenant, where the residential landlord is responsible for doing just about everything, if it's not specified in your lease, that is not the case typically in a commercial lease. And often things go unresolved and need to be repaired or addressed when it doesn't really, nobody really knows who's in the end going to be responsible, without going in and addressing the lease and interpreting it, what happened, what level of repair or disrepair or tenant neglect or whatever may have been involved. So oftentimes it's up to the tenant as a business operator. Hey, I don't care. At the end of the day, I'm the tenant running a business here. I have to repair this and then try to settle with my landlord later. So there is certainly more risk, whereas, a tenant in a house is rarely going to be required to replace a furnace to the tune of $3,000 or $4,000 or more and hope that the landlord reimburses them. That may be the case sometimes for a tenant if there's a dispute over, hey, it was a maintenance that was neglected, the maintenance was your fault, now the heater's on you, kind of thing. So there's some dispute that could arise there. And then from an economic standpoint, commercial real estate, hey, no problem. I hate to do this to you, but how about you just tell me real quick who you are, what your name is, where you're from, what brought you?
Daryl West.
Daryl West?
Around South Whidbey. We also have a commercial building downtown Langley.
Okay, great. We got a Langley building owner and a business owner from downtown, down South Whidbey. Okay, and the impact of commercial real estate, we may just think about it as office buildings, but the end of the day, your 401ks, your pension funds, your retirement accounts, the insurance that underwrites your home, much of that is founded and based on commercial real estate investments. Much, not necessarily in our little rural markets like this, but you go into the cities and you start looking at ownership structures of many of the commercial buildings around, and they're owned by big Vanguard trusts and BlackRock and big investment firms. So it isn't just the $1 of rent that's coming in there. It's the financial mechanism of that $1 in rent now allows X amount in leveraging capacity and all this additional revenue that's generated from each of those commercial leases. And then in residential versus commercial, you have another key stakeholder. It's not just you and the landlord. You have a customer. At the end of the day, you're running a business in this commercial space. And so you have a third party that's unrepresented in the party who arguably is your most important consideration, right? So it's really important to identify when you're starting a lease who the key stakeholders are, because it's not always cut and dried A and B. Maybe there's you're going to have to share a utility with, or there's a tenant that has an adjoining wall and they're worried about noise, or there's some other adjacent business that has a non-compete that thinks that you're going to be competing. So you have to identify the key stakeholders, because that's going to show you what your challenges are to overcome in your lease process. There's, obviously the basic structure of your commercial leases is what the lease is for, the duration of the lease, and who's responsible for what. And again, unlike in the residential lease where you kind of always know, hey, the landlord has to do the maintenance, we pay the rent and utilities, insurance is on landlord, taxes are on landlord, when the roof caves in, it's on the landlord, etc. You're going to have different responsibilities to each stakeholder in commercial lease, and they won't always be the same from one building to the next or one tenant to the next in the same building. They can be negotiated individually. Really, you have 4 primary types of commercial leases that we'll talk about. The most common and simplest is probably the ground lease. That's most similar to, or I'm sorry, not the gross lease. That's most similar to your typical landlord-tenant arrangement, where the tenant pays one amount for rent, and out of the landlord's portion, he's responsible for paying, maintenance, utilities, taxes, insurance, etc. A net lease, single, double, or triple net, peel out 1, 2, or 3 of those primary responsibilities out and give them to the tenant, being insurance, tax, and maintenance. So in a single net lease, it would be, the property owner's still paying for the insurance. In a double net lease, maybe taxes and insurance, the tenant's picking up maintenance. And in a triple net lease, the tenant's picking up everything. And then you have a modified gross lease, which is essentially a combination. Some things you're passing through, some things you're keeping. And then lastly, the percentage lease, which if I could beat a drum in the retail tourist markets of Washington, especially like Whidbey and Langley, if I was an owner of a building there, I would be working on negotiating percentage leases with my tenants in the interest of preserving long-term occupancy. Because if I allow my tenants to pay me triple the rent in July when they're bursting at the gills with dollars and tourists, and I let them pay me a third of the rent as much as normal in December and January when they're barely keeping the lights on, I can probably get more rent out of that tenant as a landlord, and the tenant is going to have a safer, healthier business. So that percentage lease is one that we don't see a lot. I didn't even include it in the package. There's a formula for breaking it down to see where the break point is. You can Google it, or hopefully you have a representative that can help you with that if you're trying to negotiate that. I kind of covered this, so I'll try to fly through these. The gross lease, like I said, it's all inclusive on the rent. Landlord covers everything. A lot of times this will be in like an older building where we don't have meters, we don't know who's paying what or anything like that. I don't want to bicker between tenants on this guy's running hair dryers and this guy's just running a typewriter or a computer or whatever. So you would have just straight flat rent gross leases. The single net lease is similar, except for the tenant usually pays the property rent and property taxes. Landlord would cover insurance and maintenance. And these really can be flipped around. I mean, if for one reason or another, it's the insurance the landlord's really concerned about, they could reverse that. But the idea is that one of the 3 primary categories is passed off. And then same with the double net lease. We have rent, property taxes, and insurance, and then the landlord would cover maintenance or some combination thereof. And then, of course, the culmination is the triple net lease, which is where the tenant is responsible for all taxes, insurance, and maintenance. And there's one step beyond this. The landlord in a triple net lease is still responsible for capital repairs. So tenant's responsible for maintaining the furnace and having the filters cleaned and fixing it if it breaks. But when it needs replacement, or there's the fan motor's out, or there's big capital repairs, something that the landlord by right, by IRS law could depreciate in his tax basis as a landlord, typically would be considered a capital repair, and that would be a landlord's obligation. Your responsibility as a tenant, even in a triple net, is to often do it. Now, there's one exception, and that would be what's called an absolute net, and that is tenant is responsible for everything. Roof caves in, tenant. Car crashes through the wall, tenant. 30-year-old furnace breaks, tenant. And so, you get really predictable income from a landlord's perspective, but a lot of risk on the tenant in those. And then the modified gross lease, as you can see on the sticky, anything is possible. It's going to be a variation of your types. You'll pass on some utility. A lot of times landlords will do, we have shared water, and so we do X flat amount for water per unit. And then, this space has a higher factor because they have blow dryers, and so we charge them a little more in a utility fee or something. You can create it and structure it in a gross lease however you want. And then the percentage lease is basically you take what the total rent that you need to get in the space out of the space in the building, and you figure out what percentage that is of the total sales for that business over the year, and then you distribute it in a it's really easy to do in Excel. That's where I would be doing it. Then you just distribute it and you look at the percentage, what percentage is collected if your tenants know, it requires some good reporting or at least projecting. And then you would structure that lease so that they're paying more of their annual rent during the times that they have higher revenue. And like I said, I've been doing this a long time on Whidbey Island, and I just do not see people use this. And if I owned a retail building, this is the lease structure that I would pursue with a tenant. And I think the tenants would like it. I mean, I don't know, I'm not a tenant myself right now in the space, but the fact that, hey, in January and February, when nobody's coming to Whidbey, I don't have to pay as much in rent. I think they would like that. So here, real quick, we're going to go through these when we go through the lease, but the basic terms that your clauses really need to have can be summed up in these 10. Rent, obvious. Term, the number of months or years. The use of premises is always important because landlords' insurance and other things that they may be pursuing on their side are dependent on what type of uses they may have going on in their building. There's some that could be disallowed altogether. And so you have to be real clear and upfront with the landlord in the upfront about, in the documentation about what the space is going to be used for. And if you're planning a business change and you're going to change tracks or something, you need to have a conversation with your landlord about a lease modification, because you don't want to be operating outside of the lease, because then you come into default sort of terms. Maintenance, obviously we talked about that. That's always a big question. Who's going to be covering what? And I would encourage you to get down to very specifics. You will never be disappointed to having more details in this than less. As in, hey, if the toilet breaks, who fixes it? If it's not specified in your lease, you need to have a list, and it needs to say tenant, landlord, check the box as to who's responsible, and both of you sign it at the bottom. I should stop real quick and say, even though I'm a licensed real estate broker in Washington, please do not misconstrue any of the things that I'm saying as advice on any particular transaction or something that you're dealing with. I can't give you specific advice without really understanding the terms of your particular scenario. So, use the advice and consent of a trusted professional. But this class is intended to be general and topical based on my experience, not specific agency or brokerage advice. Okay. I should have started with that. So moving on, security deposit, honestly, less common in a commercial lease. A lot of times you won't see a security deposit at all because, often there's other assets and things that the business has that they're vested in other ways. Maybe they're coming in and putting a bunch of repairs into the building, or they're moving their whole business. I mean, the security deposit is really to secure their willingness to stay. And they're usually around a month of rent. I mean, as a typical, month, 2 months of rent. But at the end of the day, if a business needs to move, a month or 2 months of rent is honestly, it's just cost of moving. It's a cost of doing business, so them walking away from a small security deposit like that, you get into some places where they have a big deposit, it might be different, but typically, I've never seen a security deposit hold a tenant's feet to the fire if they really needed to go, for any landlords out there. So, okay. And then termination, what's going to constitute termination? What happens at termination? So this is a lot different too than your residential lease, right? When you move in, it's like move in, move out. Hey, this is how it was. This is how I'm leaving it. It's not always the same in a commercial lease. the landlord gave you permission in the lease to turn it into a space for your business. So when you're ready to move that business out, who's responsible for fixing the walls and repairing the floor and repainting and doing all of those things? And the answer is, who knows? It's got to be spelled out in your lease. That needs to be part of the termination clause of what happens when termination. A lot of the standard language just says any improvements that the tenant makes become the property of the landlord on tenant's exit. So that protects the landlord by default from, I rented to a salon, they built it out as a salon. Well, by golly, I'm going to try to rent to another salon and not put 50 grand into a build out. So Mr. Tenant, you have to go away. The second you install those improvements, they become mine. And other leases might say that the property, especially if the tenant knows, hey, I'm putting in these fixtures that are mobile, I want to be able to take them. That tenant would be wise to be sure that they specify in that upfront lease agreement that the improvements that they make, they have the right to remove, and what's going to happen afterwards. Removing the sinks and the cabinets and the counters for my business isn't the end of the game, because they were all obviously screwed into the walls and anchored and everything else. So stuff to be decided there. Assign insurance. You'll have to decide in the who's going to cover the insurance, who's going to bind the policy. Typically, the insurance companies want the owner themselves to be the one with the name on the lease or on the insurance policy. So you're typically working out some sort of a reimbursement scenario with the landlord. We'll cover that in the lease. Assignment and subletting. Most leases say assignment is by default. If the property sells or the business sells, subletting is often a completely different ballgame. They don't always allow subletting. That needs to be decided. A lot of times it's just trying to help a tenant get out of the lease. Well, if the landlord, I might not, if the tenant's out of the lease and I'm getting a new tenant, well, rents have gone up since the 3 years that I signed that lease with her. If I was signing a lease with a new tenant and going through a new move-in process today, I might not have the same rent that I agreed to 3 years ago. So I may not be willing to agree to the sublet, even though it might save me from going to the tenant. So that needs to be disclosed up front, especially if you have one of those businesses that might shrink and grow and contract through economic cycles, where you might say, hey, I need to close a couple locations. You end up needing to get out of a lease or sublet. And then default, of what constitutes default and what happens on default. So paying your rent late isn't always a default. Paying your rent late and then getting a notice from the landlord saying you've paid rent late, I'm demanding you pay, and then not responding to that, that probably does constitute a default in your lease agreement. So there's going to be some things that are and are not defined as default, but it's important to know that, because that's basically the line in the sand that you have to negotiate up to. But you can't cross that line. Once you default, then the landlord's basically got you. I mean, if they want you out, they can, once you default, even if you cleared the default, not like in a real estate foreclosure where you clear the default before foreclosure, you can get out of it. You get to a landlord default in a lease agreement, it's purely on their grace and good kindness to let you back into the terms. And again, unless your specific lease has some sort of remedy clause that would allow that. So rent should be pretty clear, but what you're paying, when you're paying, how and who, is it online payments? Are there grace periods? Can I pay by check, or can I get miles, or whatever it may be? The term, now this is one where you see it comes into play a lot of times after the original negotiation. You have to redress this one later, right? I signed 2 years and now I'm in 2 years and I need more time, or want to extend it, or get an option to renew. So the term often you come back to later, but you have to define it for a specific term. And there are things based on the term that your legal representation or whoever's helping you with this is going to want to do. Namely, any lease longer than 1 year in Washington has to be notarized by any lease longer than a year, the signature of the landlord has to be notarized. Any lease longer than 2 years, the landlord and the tenant has to be notarized. And any lease longer than 5 years has to be recorded, or at least a what do you call it? Like a facsimile or a summary of the document. So the long-term leases, long-term commercial leases, a lot of times finance and banking and future loans come into play. And so it's important that those are executed and done properly, because if you need to go back to, if you got to go back to the drawing board later and renegotiate, it can be problematic. Especially, like I said, if the rents have changed, or if now all of a sudden the landlord wants to sell, but you're in the building and he really wants you out so he can sell, or so the lease term, huge. And here, use of premises. I mentioned this before, but I got some nice foliage growing here. This was a big one years back, you know, because different insurance and different neighborhood, different rules, different landlord sensitivities. So you really do want to make sure that the business that you're doing in your space is authorized, permitted in your lease by the landlord, and properly protected. You know, that you can bind insurance for yourself and for the landlords, you know, for the property, that you're not doing something that's gonna, you know, we opened a welding shop in a wood frame building, and now all of a sudden we don't have insurance. So you really want to not run afoul of that. And then maintenance. I'd say the most arguments between landlords and tenants come down to, at some point, maintenance in some way. Either you didn't do it, so I didn't do it, or we did it and you didn't like it, or whatever it may be. So you'll see the maintenance clauses on these lease agreements are usually one of the longer clauses. There's a lot to cover there. I mean, when you're just thinking about maintaining your own home and then trying to do that in a building, maybe with 5 or 10 other tenants, it becomes a lot of finger pointing, and I thought you called and I thought she called and everything else. So you want to make sure that you have that all defined up front, and who's paying for it and when they're paying for it, or when they're paying it back. We'll cover that when we get into the triple net a little bit too. The security deposit, I like the picture. That's what we think it is. I mean, you know, but the reality is it's goodwill as much as anything. It doesn't do a lot. But you do want to know under what conditions you will or won't get it back. Anytime they're going to make automatic deductions for fees. A lot of times the leases will say, we keep track of all your late fees over the course of your tenancy, and then we charge them to your security deposit if they're unpaid. So even though they may not have, you know, notified you that you paid late and here's a late fee, you find out about it later. So you want to know if you're going to get surprises from that stuff. And then there's also the whole first, last versus security deposit. And it is important to make sure that they're identified separately. The landlord's supposed to be treating the funds separately. Tenant deposits are supposed to go into their own account. The first, last rents can go into the landlord's account. The tenant deposits have to go into a separate tenant account. So it is important that you specify, I'm turning money over and this is what it's for. So always have a receipt clause in your lease identifying any money that's actually changing hands. And then termination, we covered that. What's gonna do it? Insurance, it's pretty obvious usually, but the landlord's insurance will not cover the tenant's business, the tenant's business inventory, the tenant's liability to a customer, or any of those things. The only thing that your landlord's liability insurance is going to cover is if the building burns down. I mean, or something happens to the building outside of your business usage. If you have a tenant or a customer of the tenant, you know, you're the tenant, and your customer drives through the door, that's going to be on your business. That customer was coming to your business to do business, and you're going to have insurance that covers that. The insurance companies may get into a fight between each other about who's going to cover it, and they typically do. But it's important that when you're negotiating your lease, you know, okay, the landlord's covering sticks and bricks, and I need to cover liability and theft and my personal property, and just make sure that it's all covered. Because if it, God forbid, when it comes that you need insurance, they will squirm and jive their way out of it so quick. Assigning and subletting, primarily you want to know up front, can it be transferred at all? Like, so if you sell your business, the new owner automatically gets the lease. Most times they are. And then the subleasing is, hey, it's an unrelated business. They're not under my control. It's just a tenant I found for you. That's the different conversation. And again, both should be specified in the lease as to what isn't allowed. So your default is typically you failed to respond, you failed to pay over a period of time, you didn't respond, but could be a number of other things that constitute a default. Like if I had a church next door, and their lease has me over the coals about any activity on Sunday morning, and all of a sudden your coffee shop has a live band on Sunday morning, it becomes a real problem. And maybe I wrote into my lease that that's a default. You get one shot, you do that, you're out. Well, you just defaulted on your lease potentially. And then again, the rent, people are always so fearful of missing a rent payment. You should be, I mean, you should always try to make your rent payment, but that in and of itself does not constitute a default. The landlord's going to have to follow up with you and notify you, unless the lease says otherwise, obviously. But usually there's a notification period that's required that the landlord has to tell you, hey, you're in breach of default, and then you have a response period, 10, 20 days or whatever, to cure the default before it's actionable. And then resolving disputes. This is the best thing to just overall avoid if you can with your landlord. I'll mention a little bit on negotiation strategies, but I'm a firm believer in trying to come out in a win-win scenario. Too often we go into these negotiations and stuff, and it's like, think of it as a game of tug of war, right? Where like any ground I lose in this, that person gains all of it. And any ground that they lose, I gain. It's like a tit for tat. When in reality, the real estate negotiations more like three-dimensional. It's not just a tug of war. Hey, I'm rent sensitive, but I don't mind paying deposits, or I don't mind bearing more of the maintenance and care responsibilities, but I'm really sensitive in fees. Well, maybe there's a negotiation that could happen there once you start to understand really the perspectives and the needs and wants, pain points and pleasure points of the person opposite you in the negotiation. And all of a sudden you can say, hey, well, I'm really good with repairs, for example. In fact, I'm a general contractor, so why don't I take the responsibility of handling that, and you can charge me a little less in rent? Okay, win-win. It's not always going to be a give or take. And so if you can have a cooperative relationship with your landlord with that in mind from the beginning, I know it's not always possible, but try to be cooperative. You're much more likely to have one of those win-win scenarios. But if you do have to, obviously involve attorneys. There are ways to arbitrate on bigger deals. There's some companies out there that will, if you have a big dispute, without going to court and involving attorneys, you can hire third-party arbitrators and mediators. But avoiding it is really the key. Address the problems. All too often you see people put things off to the very last minute, or when it's really urgent and all the pressure is on. And I just can't stress enough, don't give anybody any surprises or any gotchas at the last minute. Just be open and upfront with them on it early. So we do have some state regulations here in Washington that not everybody does, namely our Growth Management Act. And you'll find this as a commercial tenant, probably the lack of available space is common because for any specialty type of commercial real estate, especially because we have such small, especially in our rural communities, we have such small little footprints for like industrial or manufacturing or multifamily or commercial or office. We have these little pockets. And there's a lot of jurisdictions where, hey, when we need more office space, I buy that piece of land just outside of town, and I go to the city council and I grease their pockets with more tax revenue, and they just get a crayon out and change the shape of the city limits, and now I'm in the city limits. In Washington, our Growth Management Act does not allow that. So we have a supreme and unending supply shortage. Because the market can't just quickly respond when there's a need for X, Y, or Z type of inventory. So that's going to really affect things because, in our county, a lot of times you as business owners might be actually doing commercial business in a property that's zoned rural and not zoned for commercial activity. Now, there's a long list of commercial activities and businesses that are permitted in the rural zone, but you're going to want to go and look at that. That's not Washington state level, that's local, but you're going to want to know that what your business you're doing or the tenant you're going to rent to, you can actually do business there. And then we have here also locally, the transportation things. I had a manufacturer once when I was in property management. I had a great space for them, and they were going to move here. And at the last minute, they were doing their transportation logistics. And because of one of the chemicals that they were bringing to the island, it could not go on the ferry, and it had to go all the way around the bridge. And so they ended up in Mukilteo for that one thing. But they could have signed a lease and been here and then went to get their new, have their license moved to their new address or whatever, and found out later. So you do want to consider that. And also up on North Whidbey, you have certain areas of noise and accident potential zones, APZs, that are drawn on our maps here on Whidbey. And even if by right, the planning commission, you know, and the zoning code might allow a business activity in that zone, if you're within that overlay, your activities may be restricted there. So another one of those considerations you want to be mindful of. With regard to lease negotiations, I think I already hit on the real key point that I like to do in negotiations, and that's propose something to them that's a win for them also, regardless of which side you're on. You know, this one negotiating on one term with this back and forth give and take, it's so narrow-minded. If you can identify through conversation and just getting to know your partner across the table from you, and identify, hey, you know, they said they're retiring next year, and so maybe I can purchase, you know, maybe I'll grease his pockets with an option to purchase his property as part of this, so he'll know that I'm really committed long term, you know, or some other clause that you might think up, other than just, hey, the rent price or the term or who's going to fix the floors, to try to bring the whole picture into each negotiation to say, hey, it's not just a one term negotiation. There is win-win out there where you get what you want and they got what they wanted or better. And it doesn't always come on the same clause. Sometimes there's got to be compromise on that one particular clause, but you can assuage or mitigate that with other clauses. But always just try not to get yourself in the mindset of, if I give, I'm losing. That's not it. I mean, a lot of times by giving, you win. And it's not a black and white thing. And then when it all comes to the end of the day, you do still want to have legal representation. Any business that's doing business should have an attorney that they can pick up the phone and get a call back within a day or two. You just never know when something's going to come up. When your landlord failed to fix something that was on his list, it's a letter from your attorney that's going to prompt him maybe. You know, you got a new lease renewal from your landlord, and there's some clauses you're confused about. Attorney or a broker, if you have a real estate broker, somebody that you trust and I don't just say your real estate agent, a real estate broker who is involved and knowledgeable and educated on commercial leases and commercial lease negotiation. I wouldn't just go to your guy that sold your house, you know, that you bought your house. He may be, I don't know, but I would want to make sure. And then you always want to make sure that the person that you're working with for advice is protecting your interests. We forget about this, especially as business tenants. We go and we talk, I'm a business owner, I'm going to rent this space for my business. And I go and I talk to the property owner's property manager. And who do you think that person owes an agency representation duty to? The landlord, right? And so tenants often are unrepresented completely in the transaction. And it's hard to get a broker who's buying and selling houses to want to do a small lease deal on a commercial office space. You can't always get a superstar, but the attorneys are there to review a document, write a letter, help you with that sort of stuff. You can't go it alone, is what I'm trying to say. You really should have a partner in it. Even if you can fill out a form and you know how to read, I mean, there's more to the grand picture than that. So having some help is good. And then before we go through our the actual leases, which is what I've got next, I want to stop and ask some questions or answer questions. If anybody has just any scenarios, examples, questions, anything that's popped up in your mind, we can stop and address those right now. The moment. Yes. Mm-hmm. There's a couple attorneys I have, not at the tip of my tongue with a phone number, but There's an attorney down in Clinton that does real estate quite a bit, and a couple that I know in Oak Harbor that I could give you names for. It isn't required that one be involved in every transaction. I mean, parties certainly can come together on their own without legal representation, and you may very well do that with a landlord you're comfortable with, a lease that you've signed before, or an arrangement that you know. But yeah, it isn't a required, but certainly recommended. And then I want to take a quick moment on behalf of People's Bank to talk a little bit about what I see as a real weakness in how tenants address their wealth building in their life. And I'll start with the statistic on residential tenancy versus residential home ownership. And this is a statistic that came out a couple years ago. I think it was 2021 was the year. The average net worth of a home renter is $8,000. The average net worth of a home owner is $300,000. Now, bearing that disparity in mind and keeping in mind the fact that that net worth and the value of your home is by more than 90% of millionaires is what they attribute their wealth to, real estate. The same metric 100% applies to your business. So business owners who rent spaces, that's an important part of a business cycle. But the progression of that business cycle for a tenant who's renting their space is to stop putting that principal payment every month into the landlord's pocket and put that principal payment into their pocket every month. And so there are, unfortunately, typically commercial real estate is difficult to finance. It's difficult to buy, usually 25, 30% down payment requirements. Interest rates are often higher than your typical mortgage rates. They have shorter fixed durations. So rather than a 30-year mortgage, I might get a 15-year mortgage and it has to readjust every 3, 5, or 7 years. So there are some definite differences. But just as a point of a case study that I want to share with you, I financed earlier this year for a tenant in Oak Harbor, manufacturer, gutter company, and he had been renting a space, and he was renting, the numbers are in one of the slides. Actually, I think it's the next slide. Oh yeah, I like that Theodore Roosevelt quote. Every person who invests in well-selected real estate in a growing section of a prosperous community adopts the surest and safest method of becoming independent, for real estate is the basis of wealth. That was a pretty smart guy. And the numbers are over 90% of today's millionaires will tell you that they attribute their wealth to real estate. So in commercial real estate, 25, 30% down, businesses are typically barely making payroll sometimes, you know, it's like coming up, having the ability to set aside and be able to save 25 or 30% down is just not a reality for a lot of people. We have a loan program through the federal government called the SBA, Small Business Administration. They have a loan program called an SBA 7A loan. In fact, there's a flyer in each one of your folders about it. And that 7A loan allows businesses to buy the space that they occupy with as little as 10% down. And that's terrific, but it doesn't just stop there. And the case study comes in because not only did this borrower that I financed just recently get to buy his own space and start putting some money in his own pocket, he was able to buy a space twice the size of what he needed, and he rented half of it out. And so moving into his own building, he actually had a $1,200 a month improvement in his cash flow, doubled the size of his, or like 1.5 the size of his shop. And his tenant's rent will repay his down payment in less than 2 years. So that money that he had scrimped and saved, that 10% that he bought. So the SBA is intended for owner-occupied commercial real estate. However, it allows for 49.9999% of that commercial real estate to be occupied by a tenant, which means you can, as a business owner, you have the unique opportunity as a small business owner to purchase investment commercial real estate when your your business is gonna use part of it, and then your business can grow into it, or you can rent it, or whatever. Your business can grow and shrink over time. And we pass it up. All too often, people just pass it up and don't even consider, should I continue renting? My business has been around 9 years, not to take away a tenant from Goosefoot. I'm just simply saying my business is well established. My market is proven. I have my customer base. I know what my monthly expenses are. Should I be considering whether I should put some of that rent money into principal in my own balance sheet rather than put it on the landlord? And the two things to compare when you're thinking about that is the interest on your loan and the rent payment, because the principal payment in your mortgage is just forced savings. It's putting money from one pocket into the other. It's still your principal. You're just forced putting it into the equity in your real estate. And so it's sound financially, and especially in those cases where they might be able to get some rent income, it can actually be a cash flow enhancement as well. So I wanted to point that out. This is really the keys to real estate finance, commercial real estate financing, a little bit different, some similarities. The debt service coverage ratio when you're financing a property or as a landlord is the amount of rent that's generated after the expenses as a factor of what the property's debt coverage is, what the loan, mortgage principal and interest payments are. And we require a certain margin. So we'll only loan up to, even though you might have space to go from a loan to value standpoint, like if we said, hey, we'd loan 75% loan to value, if the property's income was low, we might only be able to get there to like 65 or 70% based on the debt service coverage ratio, because any bigger loan would not leave the bank's required margin in case the furnace breaks or your tenant doesn't pay rent or whatever margin may be needed. And then businesses often, one business owner will often own multiple businesses. It's very common for one business to have either a business that's structured with different arms and different entities, or just people that start businesses are often entrepreneurs and they might start more than one. And so we do look at the global debt to income ratio, and that's really the most important, not just what's the metrics of just this one property, but hey, we have a really strong tenant because his wife also runs a business. So we can get really great rates and terms for this because of the global debt coverage of the borrower. And then I mentioned loan to value. Usually for commercial real estate, it would be 70%, 75% loan to value. Owner occupied commercial real estate, we can conventionally finance up to 80%. So require just 20% down. But those SBA loans allow down to just a 10% payment. So, and that's not just for real estate. I mean, I'm a real estate guy, so I talk about real estate a lot, but the SBA will finance, like say Goosefoot has a tenant and they have a really good business and they're going to rent the space, but there's $100,000 shortfall in this remodel that needs to happen, but they want to sign a 10-year lease. If you'll come up with $100 grand, we'll come up and finance 90% of those improvements as long as the tenant's term of repayment equals the term of the lease. So we say a 10-year repayment, 10-year lease, we'll finance it. Goosefoot's not out the money. You got to come up with 10% down. Tenant comes up with it, whatever. So it's not always just all of the real estate. It can be equipment. We finance dental chairs and big fancy hair dryers. You want to open a tanning salon, that sort of stuff. We finance equipment too, not just real estate. Obviously real estate are the larger loans typically, but we do, I've financed excavators and bobcats and different things like that too. So, and then one key difference, anytime you're considering owning, I already mentioned it, it's different in terms of the amortization. Your 30-year mortgage is fixed. And the reason is when that mortgage happens, and you've probably experienced that, you get a mortgage, you sign your loan, and then you never even make a mortgage payment to that bank, right? You get a letter in the mail like the next day that says, hey, you're making your payment now to Chase or Bank of America or Auckland Loan Servicing or whoever it may be. In the commercial world, there isn't the same secondary market. So it's not all just cookie cutter. So in the residential market, banks are sitting there going and giving loans to customers out the front door and taking the same loan and not even putting it on the shelf, selling it out the back door and taking the revenue that they get from selling some of the future earning potential of that loan on the secondary market. And then they turn around and they take that money and loan it out again. Not much loaning going on right now, but that's the model in theory. Whereas the commercial side, we're loaning the bank's money and we don't care about a secondary market. That loan just goes onto our shelf. And we collect the monthly interest, and if it's a 3-year loan, we wait 3 years. If it's a 5, 10-year, 25, whatever the term of the loan is, that's a commercial loan in the bank. It stays with the bank. So you get the benefit of having a relationship in the future with me. You get, we have a lender customer relationship established there, and you don't get handed off and stuff like that. It's a little different scenario. So, and I think that I have, obviously credit. We look at a bunch more stuff doing the business side, like industry health and recession implications. Talked about the types of loans, documents required, financial statement, tax returns, business financials, and information about the collateral. We're real relationship focused. So anytime you're doing business with People's Bank, we always ask questions about the rest of the story. Like, who are you? Why are you on Whidbey? What do you do here? What do you like to do in your spare time? What do you care about? Other things. We build an entire customer profile, and it's the relationship that gets banked, not just one deal or one opportunity. We're really focused on that. Been around 102 years, focused on people. So, and I think that's all for my pitch. I went over the case study already with you, and oh, I didn't. Oh, okay. No. So the borrower rent was initially $2,500 a month. He was renting 1,800 square feet. He was forced to start looking because his landlord sold his building. In this case, he came to me because somebody had recommended him talk to me from a real estate perspective. I happened to know the landlord and was unsuccessful selling this building a few years before, and so he'd put a tenant in it. So I just reached out to him and said, hey, I got a client, a potential client that's looking to rent a space. Do you have any vacancies still? And he said, yeah, my tenant just moved. I'm still dying to sell this building. I said, oh, good. Well, I think this guy can qualify to buy the building if he wants to. So let's get him in there to rent the space, and we'll work that out. So tenant was able to move from the space that he was getting kicked out of into a new rental space, worked out for him, and then we got started on buying the building. And again, coming early is always key. Just the harebrained idea hatches in your mind. This is what I want to do. Call your banker and walk it through. Like, have the conversation early, because a lot of times there will be like, if we get to this point, the deal doesn't fly. But if we get to this point, the deal does fly. It's just a matter of, it's the same deal. You just got to get there a different way, right? So if we know that early, we can be sure we set ourselves on the right path. So like I said, the building was 5,000 square feet. He really only needed about 2,500. It was still more than what he was getting before, renting out half. He bought the building with 10% down. I think the total that he came out of pocket, including interest and fees and all that stuff, and appraisal, title, was like $63,000 out of pocket. He bought a $530,000 building, and his payment was $3,300 a month, of which most of it was a good portion of it was being paid by his tenant. So he actually had a $1,200 a month cash flow improvement, even owning his own space. So between that cash flow improvement and what the tenant's paying in rent that he was not generating an income before, his out of pocket, he'll be able to show repayment of that out of pocket, like $63,000. That $2,000 a month gets repaid in a couple of years with your 2-3 years. Yeah.
Couple different directions of healthy wellness. It's half configured for a restaurant because we ended up talking against COVID, long story. So it's half built, and I'm trying to decide how far to finish out. It's unfinished, half built and torn down, and put up some walls and such. And it would be the responsibility, or mostly be the responsibility of the tenant when we secure them. But I'm just wondering if I have somebody who's interested in their opinion on, especially in terms of health and wellness, I want to open up a yoga center and how lots and that. So
yeah,
they're going to have to do some investment. They're probably not going to be terribly sophisticated. Is this a solution?
Absolutely.
Hey, I want to do it. There's this program. You get 10%.
It's a perfect solution for that. Yep, that's a great use of it. And sometimes it's the landlord that's our borrower, and sometimes it's the tenant that's our borrower. If it's the landlord that's our borrower, the property itself is the collateral that's securing it. If it's the tenant that's our borrower, really it's their tenancy that in the space that's our collateral. So the lease just has to match. Like if it's a $300,000 build out, they're going to finance it over a longer period of time. The lease has to be 10 years or whatever, however long enough. Lease or lease options for tenant renewal.
And I imagine they have to make sure they present a viable business plan or.
Yeah, the business for a 7(a) loan, they need to have been in business already. So it wouldn't be we couldn't do a startup. No, we can't start. Two tax returns is really ideal. We ask for 3 normally. We can do it with 2. If somebody has 1, it's still worth having a conversation. If they have 1 tax return and most of a year to date, we can start the conversation. Might not be able to close until after that year too, but we can get going. Yeah. Yeah, no, please do. Okay, so I think we're gonna go on to, should I take a quick break or? Okay, so feel free to get up and leave if you need to go for a break. And then, so I'm gonna take, this stopped working. Just went to sleep. Oh, is that the end? Oh, okay, yeah, my bad. Okay, so we're gonna start. Yeah, it's got my phone number on it. You can leave it there. So commercial leasing in Washington State. I made the student guide. We already kind of went through all the slides. I just want to turn to the lease agreement and just walk through this multi-tenant triple net lease and talk through a few of the clauses that weren't covered in the general cover. So I'm just going to kind of walk through, but please do stop me if something comes up, a term or something. Our lease premises, obviously, we know what that is. The lease commencement date, a lot of times that'll be different than the lease that you're actually starting, signing the lease, because we know there's work or something that needs to be done, and so, or my business needs to move. So commencement date is often not the date that you're signing the lease. And then your termination date is established up front. What the base rent is usually established up front, although you do also have the option of attaching a more complex or more detailed schedule of rents if you have planned increases or credits or anything that you need to wash out. So the box in this particular lease, there's a box there that says that you can check and use the rent rider, which I also included. And then discussion of prepaid rent, security deposit, and then permitted use. So you'll notice that it says shall be used for blank only, shall used only for X. So you need to be detailed in that. If you're doing hair care and retail sales, you want to list hair care and retail sales and not just say I'm doing hair care, because then you might have retail hair product seller comes in next door and the landlord didn't have you listed as that. So you don't have a non-compete. Now the customer is buying their stuff from the discount place next door. So make sure that if you're doing business, you list it there. And then where your notices are is another important one there, just so that, if they've mailed your address to the address, they send your notice somewhere that you didn't advise them you had a new address, it's going to be on you, not the landlord. Now, this is a triple net lease. So, and it's a multi-tenant triple net lease. These are really common. I know they're common for the Goose. A lot of these buildings over the years get broken up into multi-tenants. So the key to that multi-tenant lease is this section I, 1I, tenant's pro rata share. And you would be smart as a tenant to verify this by measuring the space that you're in, measuring the building, or at least getting on the assessor's website and looking at what the total square footage of the building is, or asking the landlord for a schematic. Because in a triple net lease where you're paying a portion of the expenses, if you only occupy 7% of the building, you're only supposed to pay 7% of those expenses. So you want to really make sure that you know what size, what portion of the building you are. Everything from here is going to be based, your percentages of everything is going to be based on that. So that's one number you want to make sure is accurate. Usually this lease has documents at the end where landlord and tenant work obligations are listed. Often you would do that in this acceptance of premises. It says except as else are specified, landlords make no representations. But you could slip it in there if there was a list of things that you were going to be doing. This lease has it at the back where there's a section. Then term, early possession, delayed possession, pretty self-explanatory. Okay, so then it is where it gets a little bit squirrely in the triple net lease. There are a couple different ways that you might encounter a landlord managing what would be considered a triple net lease. There's really two ways that they do it. One way is that a landlord manages the building. I pay all the utilities and everything like that. And then I total that up for the year, and I bill tenants each monthly 1/12 of that amount. And then at the end of the year, there's typically a reconciliation where we billed them all of this exact amount, knowing that these were going to be expected expenses. Our expenses ended up being higher or lower, and there would be a reconciliation and a credit onto a credit or a debt onto the next year's worth of CAM. Common area maintenance charges is one term you'll often hear. CAM, triple net, they're referring to the same thing. And so that process just involves, keeping track of the landlord, keeping track of expenses and reporting them to you on an annual basis, and you doing this reconciliation. There's another method called a base year method, which is they total up all of our expenses for this year and say every expense that increases of the landlord over and above this gets passed on to the tenant once a year. So this year, our operating expenses were X and they got passed on to the tenant. Next year, they go up a little bit, and the increase from what they were in the base year is always going to be passed along to the tenant. And then the next year, that base year increases again, and that's passed on. But it's only, by default, it's only the cost of expenses going up that's driving up the tenant's rent. Okay, so the actual rent amount that you pay is going to be specified in that rent clause or on the rent rider, which may say, you'll see on this rent rider, there's an option for a CPI adjustment, which would be to the rent. So the costs don't need a CPI adjustment because they're supposed to be actual costs. Inflation will be represented in those costs because of their actual increase. Whereas the rent, your borrowing power of your landlord is diminishing every year that he doesn't pass on an inflation adjustment to his tenant. So when he could buy 500 loaves of bread with his monthly rent, now he can buy 490 with the same rent. So the idea is if a landlord works into their leases, a lot of times you'll just see a flat percentage, like a 2% or a 3% annual increase, where it's inching it up ever so, inching the rent up ever so slowly. More aggressive would be using the form and tying it to the actual inflation indexes, which is what you see the more sophisticated leases doing. And then it can get, 6.7% last year. That's not a small, and that's not an accurate reflection of actual inflation because they take fuel, food, and housing out of the inflation numbers. Go ask why, I don't know. Okay, so then another clause that will catch people sometimes in leases is this less than full payment of rent. If rent is not all collected, the modern leases, landlord-tenant leases, especially for residential, need to have it specified as dollars are collected, what do they apply to first? The commercial leases haven't been updated with that legal language, but I think it's important to put in your lease. So if I know if I'm a tenant and I'm clawing to get caught up and I'm paying, is he applying all the rent that I'm sending to the late fees that I have first? Or does that get applied to my rent to get me out of default, right? So I don't want him putting all of my payments, trying to get caught them to the late fees and the interest first. I want him putting them on my rent first. Well, to the landlord, he says, heck no, I want him paying my fees first. He's always going to owe me the rent. So it needs to be decided. That's something to state. It's not stated in this lease. It should be. And then, of course, method of payment is pretty self-explanatory. Utilities and services. This is one when you're in a tenant in a multi-unit building. They may have central heat, for example. So like Sammy, I don't know if you guys have heat in this building that's set and I can't change. But if I am in a tenant in a building and everybody else is an office tenant, but I run a counseling service and we do evening groups and I don't have access to my heat because my landlord has it, I'm going to have a space heater in my office for me and my customers. Well, one of the things that is different in this lease under utilities and services is what hours the landlord's required to provide those specific services. So even just down to nuance like that, you have to think about covering it in your lease agreement, or it could be an issue later. All of a sudden, you thought your triple net CAM fees were going to be X, but now he's had to increase the electricity for the whole building because you're open another 6 hours in the evening, and so now it's all on you, buddy. But you got to specify that. And then same with assessments. The only thing that really comes into play is, you know, sometimes tenants will do things to a building that changes the tax assessment. That's the landlord's problem. That's not a tenant's problem. That would just be like, hey, I enhanced it. I put in an outdoor patio, kitchen area, and now my landlord's property taxes went up because his assessment went up for the new, you know, the new construction. Another one of those things to consider. Alterations. Alterations is one of the areas that will often cover how you're supposed to restore the unit when you leave. You're permitted, usually detailed instructions on what modifications you're going to make. And in this alterations place, you want to also be able to specify what you do and don't have to do on the back end of that. Because there is, you know, most times damage. And then this one says repairs and maintenance on surrender, number 13 there. You can see it says tenant shall at its sole cost and expense maintain the premises, blah, 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 blah. Where we get down to the end. Tenant shall promptly and peacefully surrender the premise together all kinds of, but subject to any obligations to remove any tenant's work is further provided in this lease. That must be somewhere else that we have that. So that's must be listed. Damage and repair, condemnation. And we'll get to it. It's in here somewhere. Okay. Here we are on to, okay, so moving on from that to repairs, maintenance, surrender, right of reentry, signage. That's another important consideration for tenants. You really, 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 really need to specify that in your lease agreement. It can make or break your business if you don't have the right signage and frontage, and are they going to give you 3 feet on the main sign or 1 foot or 0 feet, or what are you getting? It's a really important consideration for commercial tenant. Not all commercial tenants. Obviously, if you're manufacturing something, you can do it in a closet and nobody needs to know you're there. But for anybody that's doing retail, service-based business where visibility is important, that signage is an important one. Okay, damage and repair. This covers like what's going to happen when your customer drives through your door. Condemnation, what happens if the building is no longer habitable. Obviously, your insurance mentions your liability insurance, property insurance, what landlord insurance they have to have. Now, waiver of subrogation is one that nobody really understands what it means, so I'll take a quick second and just tell you. You see it in a lot of agreements, especially related to any sort of insurance. It basically just means that at the end of the day, if your insurance company can't get it out of the other person's insurance company, you're agreeing here for them not to go after you personally. So you're basically waiving the, hey, if you can't get it out of my insurance company, you're not getting it out of me kind of thing. And that's essentially what a waiver of subrogation is. And you can read it for more clarity on that or Google it, I'm sure. Boy, it's number 18,
Oh,
17E. 17E is waiver of subrogation. I don't know what happened to the page numbers. Because they were on it when I started this. So was the copyright and all the brokerage information up here. It must have just not scanned. Okay, and then same with similar in a way to subrogation, indemnification is a liability mechanism whereby you basically are telling the landlord that you're indemnifying him against your activities. In other words, just because he owns the building, because I didn't clean up a water cup that spilled in my restaurant and a tenant slipped and sued me, even though he owns the building, I'm agreeing that my insurance and my liability will protect him in that suit and vice versa. So the indemnification is, put it this way, nobody pays attention to it and it does not matter until it really, really does.
Last year, we had a week-long ice storm.
Uh-huh.
Some of our tenants decided to open into it. We couldn't get here safely to ice the sidewalks because people couldn't leave their houses. But if somebody slips going to their business, it's on that.
I'm going to defer to your legal advice on that and the lease, but it will come down to the language of what your lease says, put it that way. Yeah, yeah. It may be on them, it may be on you. I mean, if you're the building manager and you're the one responsible for salting the sidewalks and you can't get to it, it may be that you have to tell your tenants you cannot open, or it's on you. It might, that type of thing. Okay, so indemnification. Okay, so assignment and subletting, I'm going to leave that because we know what that's all about. Default, failure to pay. Okay, it covers all your defaults. You always want to know exactly what you're agreeing to and what happens if you don't perform. So pay attention to your default clauses. Reentry and reletting, some of this has to do with after the fact, once you've given notice that you're going to vacate. Failure to move property. So on to number 23. This is a strange clause, mortgage subordination and attornment. You might see that in a lease. It's basically giving the tenant it facilitates the landlord getting a loan. Same with the estoppel certificates down at 28. Those are agreements on behalf of the tenant, basically to participate with the process that the lender or that the borrower, the landlord may be going through if they refinance or get a loan on the building. And the estoppel certificate is a fancy way of just putting every term of the agreement onto paper and signing outside of the lease. So essentially, Tel and I may have come up with a under the table lease agreement that's all inflated, and he knows, hey, when the deal closes, he's just going to walk away because we've got the other side agreement. Well, the estoppel certificate is a document that says, here are the terms of our agreement, and there are no other terms to this agreement. And it's signed by buyer and, landlord and tenant. And then the buyer or whoever's getting the loan or whoever's financing the loan knows, hey, this is, obviously everyone can always commit fraud, but it's one more layer of saying, hey, they've attested that what we show is accurate. So that's what that estoppel certificate is. You may randomly get one out of the blue from a landlord. It's literally, it's nothing to be concerned about. It probably just means they're refinancing or they have a loan that's maybe coming up for renewal and they have to get those from all their tenants. And then we've got some other clauses here, transfer of liability, landlord's interest, right to perform, hazardous material. Hazardous material is another important difference for you guys to understand between residential and commercial real estate, just in general. So if you buy a house and beneath that house is a nuclear reactor, you didn't know it was there, and it's leaking nuclear substance, and every frog that's born in the river downstream has 3 arms. You have no duty to clean that up. You have no obligation to the government, to your neighbors, to anybody in any way whatsoever to clean that up. If that was a commercial piece of property, and even if you hadn't bought it, even if somebody gave it to you, Somebody was just like, here, Sammy, I got this 5 acres of commercial down by the airport. I don't know what I'm ever going to do with it. I never come to Whidbey. It's yours. You can have it. You sign the deed. It's yours. When you find out that there's a nuclear reactor under there, you have a duty to the public to clean it up. It could be millions of dollars. It could be Superfund's cleanup site, and it falls on you to clean it up. So when you're getting involved with a piece of property as a tenant, and certainly if you're going to own the property, you really do want to have a good idea of what it is. You know, was there an auto place here? Was this a dry cleaner? I mean, for the safety of yourself, your customers, your tenants, you would want to know that. But just say on the off chance you're a tenant there for a while, you become the anchor, and maybe someday you do want to buy it. Well, going into it when you're first moving in, something like that might be top of mind. It may not be something you're thinking about down the road. So I would be mindful of that right up front. And any commercial lease agreement is going to spell that out, because landlords do not want a dry cleaner to come with all their chemicals, or, you know, I don't know, a hairstylist probably is, you guys use all organic green stuff nowadays anyways, but yeah. So, but I mean, there are some that are putting some pretty nasty stuff, and if it spills or they're storing a lot of it and something happens, a fire or whatever. So the environmental is definitely one of the important considerations and the differences between commercial and residential. The rest of this is pretty well boilerplate. There is one quiet enjoyment. This is very generic. Provided tenant pays rent and performs all its obligation of this lease, tenant's possession of the premise will not be disturbed by the landlord or anyone claiming by, through, or under the landlord. So if again, we back to that, what your approved business is in your lease. If you're expecting to be able to have your Sunday morning coffee shop jam next to the church, and you didn't specify that you were going to have live music, you could really come into a problem, because that landlord is going to come and bother you and give you a hard time, and you have no right at that point to quiet enjoyment. It's only to the extent that you are in compliance with all the lease and that you've paid your rent. Nobody's going to disturb you. So again, just to knock on that, just make sure that you list everything. And I have seen businesses kind of say, oh, well, we're going to do this, but we're going to do this. And it just put everything, you know, give yourself the flexibility to long-term. Hey, today we're doing this, but we want to grow into this, and man, negotiate it up front, right? Don't come back later when your landlord and you are also disputing over who's going to replace the mini blind on the front door, and then come asking him for it. Cause you know, he'll give it to you, but you're replacing the mini blind, right? I mean, that's just how it's going to play out. So get what you want up front in the initial terms if you can. Obviously governing laws, Washington, Arizona's Heinsberg's entire agreement. Any other strange clauses in here we should cover? Agency disclosure, commission, and broker provisions. Not applicable in this context, but it is, you know, you get what you pay for. So if you're going to hire somebody to come and assist you, you do want to pay them. And then that could be listed in the agreement as well. Landlords, if they're advertising a vacancy, a lot of people don't realize this, but if a landlord is advertising a vacancy, a lot of times their property manager has already priced in a fee to pay to a participating broker, even though 99 times out of 100, that participating broker is them. But when I sign a lease commission, if I was going to lease this for Goosefoot, I would say, hey, the leasing commission is, you know, 10% of the lease amount, or 6% of the lease amount, or whatever it may be. And the listing, when I advertise that, is going to specify a portion of that, just like in real estate, a portion of that, just like in a house sale, portion of that for the person representing the seller, portion of that representing the buyer, same in landlord and tenant. So a lot of times it's already there. There could be a finder's fee or whatever for your broker. So don't think you have to just go straight to that landlord or their property manager. It'd be worth a call to somebody that you know and trust if you could. Any questions real quick on that? So these leases, just so you know, these leases are put out by the Commercial Brokers Association of Washington. And it's the same lease actually that they use in Oregon and Idaho too. But there's one other part, especially if you're in the negotiation phase, that I want to cover with you. And that is the letter of intent. So back to your question about the tenant improvements. You might not know the answer to that, whether that deal is going to be financed or whatever. And so you don't want to sign a lease with your tenant until you know that, right? A letter of intent is often a really good starting point, especially if you're approaching somebody that maybe has a property that's not listed for lease, or you just heard through the grapevine and you want to pitch them a proposal, tell them what you're wanting to do. One of the documents that I put in there is it says the letter of intent to lease multi-tenant triple net. And it's basically a lease summary. It's the basic terms of what you're willing to agree to. Not every single jot and tittle yet of the final lease agreement, but certainly a good place to start. And this would be sufficient for bank financing. So if you were to come and say, hey, I have this letter of intent signed between landlord and myself and my tenant, and this is what we want to do. Here are the plans. This is a description of the materials. Here's the contractor who's going to do it. We would use this as the basis for it until a purchase and sale agreement was actually completed. If there was going to, if there was a sale related, but for you, between just landlord and tenant, you're not going to have a purchase and sale agreement. You're going to have a lease eventually, but you might not have a lease if you can't get a financing proposal. This becomes the key to that. So,
These get notarized.
no, they don't need to be notarized. I don't know if
Close to 11 and 10, and then 2 days before we died,
yeah, that's too bad. No, these don't need to be notarized. It's pretty generic. I mean, the idea would be that you take the clauses, right, that you need, that you want to convey, and leave the ones that aren't applicable. So that's a good tool. And then, a lot of times you come back after the fact and something wasn't covered. So this, you can just use this same format up here. This language at the top of the document for anyone online, it's listed as addendum to CEBA leases. It's just a single page. It's mostly blank. But the key for you here is the description and how they attribute this new document to the original agreement. And that's important when you're going to come and amend your document later. The timelines and the dates become very important. So you want to be sure to include that sort of preface up there that describes the original agreement, what the property was, and then you're agreeing to amend the agreement as follows. And you would be just real specific about what changes you were. Most often you see, hey, we needed some extra time to close the, to get our business moved, or, last tenant left the place in bad shape, so the landlord needs another month, so we're pushing the commencement date back, or whatever it may be. But just use that language up front. And then it's always a good idea, if you're negotiating anything with your landlord, both of you should sign it. Even if you're not going to go have it notarized, you both should acknowledge it and date it. Acknowledge it and date it. I can't stress the date enough. And then I think the only other document I wanted to cover, there's two, the rent rider and the option to extend rider. These are often a big this is what you're negotiating at the end of the day a lot of times, like how long can I stay in the space and how much are you going to get out of me? So we'll start with the rent rider here first. But if you call back to the original lease agreements, they leave a box there where it says the rent is going to be box and then a blank for an X amount, or according to the rent rider attached. And so this would be the rent rider. If you check that box, you would use this or something similar. And so you can see you can either set a base monthly rent schedule. Now, this is not having anything to do with the triple net. That whatever's agreed to in the lease agreement's not being even at issue here. This is just that base rent conversation. But you can specify it per year. So you might, if I was a new tenant in a space and I knew, man, I know this landlord could probably get $3,000 a month for it, but I can only afford to pay $2,000 until I have X, Y, and Z happen. And that's going to be 6 months or a year. Well, you might go to that landlord and not just pitch, hey, $2,000 a month, but give them a rent schedule and rationale to say, hey, it's $2,000 a month this year because Here's the reason why. I know your space is worth more than that. I want to pay you more than that, and I will in year 2. Here's the rent schedule, and just go in. You're not lowballing him anymore. You're pitching a deal to him that will eventually, if he's patient, get him what he's asking, him or her, what they're asking for out of their investment property. It's just a matter of a little bit of delayed gratification. And people are much more willing to delay gratification than to turn it down altogether. So that's one of the keys in lease negotiation. A lot of times it's not like a tenant can't afford or doesn't want to. It's like, hey, I have the opportunity to do X, and if I do this, then I can't do that. So the timing is off. Well, coming back to the landlord with an alternative timing proposal that in the end still gets him what or her what she wanted is going to be much more well received, obviously, than just continuing to hound them with what you need and not taking into consideration their ultimate goal. That's back to that whole win-win, get out of the infield, stop hitting singles in the infield and get together and hit a double.
Baseball analogy.
Go Rangers. And then the last thing I'll cover with you is the option to extend rider. And understand first that an option to extend is really purely and solely for the tenant's benefit. Landlord gets almost nothing. This is so unbinding to the tenant. This is just merely, hey, if I feel like it, I can send you a letter and extend my lease for another 3 years. There's no, hey, if I perform really well, my rent is going to be X or anything like that. The typical option is just, hey, we're talking about additional time. And so you can get creative with it and change things up for your renewal periods. But most times people just see the lease that the landlord and tenant already were comfortable with and they agreed to. We're just going to bump out and extend those terms for another period of time. And sometimes you'll have a change that comes in there. Like, for example, on this other one, we were just looking at the rent rider. Maybe landlord comes back and says, we've had the rent flat for the last 5 years and we're just really falling behind on where our expenses are and our taxes have gone up and blah, 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 blah. So we're going to move you to a consumer price adjusted index. And so rather than you having a flat fee, there would be a flat fee in year 1. And then each year, if inflation's up 6% that year, your rent goes up 6%. But if inflation's back to 1 or 2%, your rent is up 1 or 2%. So you have the option really to negotiate anything. CPI adjustments are heavily for the landlord. You want to avoid CPI never goes down. And most CPI clauses even say, even if CPI is negative, these amounts never go down. So from your standpoint, you're really wanting flat, predictable, hey, I know what it's going to be. It's going to increase 2% in year 3 and 2% in year 4 versus shoot, Fed's running wild. Who knows? Interest rates are 9%. I don't know what it's doing. So from a tenant's perspective, if I'm representing a tenant, I'm trying to negotiate flat increases versus some sort of index because of the predictability.
Question for you on that. In your experience, when you've done a CPI adjustment, how frequent is that? I hear when I got started a few years ago, we had 2 tenants, 5-year lease, and the option to renew another 5-year, and the rent will be adjusted by the CPI, which didn't pay a lot of attention to it because back 3 years ago, there wasn't a whole lot to play for it. I'm negotiating the next 5 years. Should I go and say, no, I'm not paying 5 years. I want to have a readjustment every year. Is that typical or am I being true?
No, it's not typical. I mean, I wouldn't say it's typical. A lot of times you will see that in increments. Yeah. Where it's 5 years and then it jumps up a whole bunch at that one time. When you're thinking about it though, it's not 5 years from year 1 to then. It's not I'm one adjustment in year 5 that takes my inflation from year 5 to year 6. It's one inflation in year 6 that takes you from year 1. So when pitched that way to a tenant, and if you're gonna sign a 10-year lease and you say, hey, we can either do it one of two ways. I can raise your rent gradually with inflation, or we can wait 5 years and I'll double it all at once. If I'm the tenant, honestly, it's healthier for the tenant for them to have gradual rent increases than flat. And I'll tell you why. I've had this conversation so many times with landlords over the years who say, no, I keep my rent flat because I want my tenants to stay forever. Okay. Okay, well, the problem comes in that tenant, by natural progression, age, experience, people's wages tend to go up, okay? So as that tenant's rent is held flat and their wages are going up, all of that wage growth is being consumed by Starbucks, the new house, the new boat, whatever it may be, and not a proportion of that growth being preserved for the inflation of the housing unit or the commercial shop space for the business or whatever. So ultimately, what you do to yourself is you force this tenant to get, you're giving them a break today, but you're going to squeeze the hell out of them later, because you're going to come at them at some point, or a future buyer of your building, or your kids, when you die and they inherit it, are going to come at them with a giant increase, because it's fair. I mean, and then when you pitch it the other way, hey, Mr. Tenant, you've been below market by 50% for 7 years. So let's do the math. You've gotten a really good deal. It's hard to sell that tenant on that and keep them to stay at that point. You're going to be looking for a new tenant more often than not. So I find it better, just be upfront. Hey, everything goes up every year. So we're going to 2-3%. We're going to make it, comfortable. And maybe there are years that, hey, this is an election year and my business falls off in an election year. So I'm asking to not have an increase this year, and we'll put it off to the next year, or what, every business is going to be unique, but negotiate that. So, and then I think that's pretty much, these are key documents you guys have in your hands, the weapons that you need to go take down a space and do what you need to do. I certainly recommend involving, like I said, a real estate broker or an attorney. Is there any other questions I can ask for you? Any strange landlord clauses or crazy landlord behavior that you want to vent about, or anything for me?
I do have one question. Just when we were reading about, the hazardous materials.
Yeah.
The description there, I started thinking about the previous, we had tanks removed from this site here way back when, and the same in Freeland, even in London. I don't even know that the tanks were removed in London. And that's empty now. It's remained empty, and it could very well be that has something to do with that. I don't know, but that is critical, and people not doing their due diligence. But the description of hazardous materials could also apply to alcohol, don't you think?
Probably.
If you ingest it and it's harmful to your life.
Yeah.
Not that I'm a teetotaler, I just was reading that and thinking, but they tried to be all encompassing,
right?
What it meant without detailing specific substances.
So again, where you'd come in and you'd read that, if you're the liquor store purveyor, then you would want to make sure under permitted uses, you specify liquor, wholesale, sales, distribution, whatever you're going to be doing. Specify it there. You're being completely upfront about what you're carrying and what you have. Should be no problem. Although I guess anything's flammable.
We're the only true green salon here. When I was traveling and teaching hair design, I was in Santa Monica, and Green Circle Salons were starting, and that's a Canada-based company. And what they do is they take all the unused color, cut hair, all the foils, all those chemicals, and they recycle. Which, if you go to the recycle, you can't take anything to them, because it was just. And so I figured immediately, we live on an island, so anywhere you should do that. It helps protect the community. I think that's just something that doing the right thing is that's what it's all about.
Did you ever live on Cranes Landing Drive?
Yeah, man.
Oh, okay.
I was wondering, I was like,
Yeah, all right. Yeah.
Yeah, we were there and then we actually had a friend at Chelsea. Grew up with or something that they had a house. We ended up moving from there and then and they were looking at better place. We met before. So. Yeah.
So I have a question online from Pam. If I'm renting a shop on my home property, the taxes are all rolled into one. Would I do a double net lease then? Well, you certainly could. That would be one easy way to do it. I mean, in that instance, you're in essence just going to have a little bit higher base rent. But if you wanted to be more specific, you could actually contact the assessor's office, and each property at the assessor's office has a property card, and every structure on your property is going to have a unique value just for that structure, exclusive of the other improvements on your property, like your house and stuff like that, and land value. It'll be separate. And so if you really wanted to pass on just the right amount of property taxes, you could determine what the assessed value of that shop is and apply that to your tax rate for the, you know, what it showed on your most recent statement you get in February from the treasurer. And that would be the exact tax bill that tenant's improvement that he's renting from you would represent. Hopefully that answers your question. Okay. I didn't miss any other questions online or anything, did we, Sam? Okay, good. Well, any other questions or comments? I hope it was helpful, informative for you guys, and maybe futures online.
It was very, very helpful because I think a lot of times, probably for all of us reading contracts, I'm a hairstylist, and I understand a lot of
Right, yeah.
And I think things like that, it's better to ask questions instead of take for granted that it's okay.
Well, I did include in the as hope. I have to be completely honest. I love business and I love real estate and I love. So whether it's something you think I can, or with something going, or a question that comes up in the course of your managing properties or leases, no means an expert on everything, but I'll just take a quick minute to say, customer for 14 years before I went and worked there. I loved being a customer. They just took really good care of me. They always knew me. They expect when something was going on my account, I would get calls about, I mean, not that they're snooping, but they're dialed in. And I just thought, oh, this is great. Well, then I went to work there and I very quickly understood why I had had the experience that I had had at People's Bank. And I can sum it up pretty much by saying this. The leadership of the bank, first, it's privately owned. So it's owned by a family that's owned it since the beginning. It's 102 years in business. And they tell us continually, just make the decisions that are in your customer's best interest, and help your customers make the decisions in their best interest. Don't worry about doing things that are in the bank's best interest. Take care of the customers, and the banking part takes care of itself. And so, and another thing that was said in a meeting one time was, don't just treat this customer like you want to bank them, but treat this customer with enough respect and loyalty to make it obvious that you want to bank their kids and grandkids. That's the type of longevity you're talking about in a bank that's been privately owned in this community for 102 years. It's not just today's transaction. And I'll be honest, we catch a lot of grief for it because a really good deal, just a great transaction could come across my desk and we will turn it down because we're not a transactional bank. It is not about the transaction one and done and moving on to the next. It's about a relationship. Did you know the customer first? Did you have a relationship with them? How long have they been doing business here? You know, what else have they done? How can we help them? It becomes more of a relationship versus just a tender and sale. You know, it changes the way. I'm proud to work at People's Bank because we have a great reputation in the community. I have, with the exception of some underwriting challenges that we've had with residential mortgages, just some shortages of staff and vacation in the last few years that happened at just the wrong time that gave us a couple bloody noses. By and large, we've got a great reputation, and I think it really is because we want to do good by our customers and them first, not a shareholder and, you know, not some CEO that's on us to have top sales and open new accounts for people that don't know about it and everything else that you see in the banking community. So, yeah.
Because I hope that, you know, I mean, like anything, that she grows up, I would love for her to be an entrepreneur and get out and pave her own way. And the only way to do that is having a good relationship in that community, with financial institutions and all.
Yeah. Well, keep me in mind if you or any of your customers or peer group have a need for anything in the bank or real estate or whatever. I'm happy to, like I said, I'm happy to help. So
Thanks so much.
thank you. Thank you, guys.
Appreciate it.
Thank you.
Thanks.